Good morning, bonjour, bon dia a todos. My name is Fernanda Whitaker. I'm the Director of Partnerships at Innovate BC, and I'm also the co-chair of the British Columbia chapter of the Brazil-Canada Chamber of Commerce. And it is on behalf of the BCCC that I welcome you all for this morning for our meeting on the margins of the Association for Mining and Exploration Roundup conference. And before we get started, I just want to make some acknowledgements and show gratitude, first of all, for all of you for being here in this morning. Also for the lands where we gather this morning. These are the traditional and unceded territories of the Musqueams, Squamish, and Tsleil-Waututh people. I also want to, I'm thankful for our team, the Chamber, especially the team in Toronto who put this together, and for our executive who's here, Peter Hawkins. And last but not least, I want to thank our sponsors for this session. And I'm going to read. We don't want to mess this up. As a platinum sponsor, we have Vale Canada. Gold sponsors EDC, Wheaton Precious Metals, and G Mining. And silver sponsors BMA Law, Jaguar Mining, Lundin Mining, Alvarez and Marsal, 4B Mining Group, and Brooksfield. This year, the Chamber is celebrating 50 years of building relationships and partnerships between Brazil and Canada. The Chamber is an independent, not-for-profit association that's maintained by its members. And from our humble beginnings, we now have 40 members with the Chamber. And together, they combined developed over $2 billion, and they represent the range variety of sectors and industries, including infrastructure, innovation, science and technology, of course, mining, ESG, diversity and inclusion, education. We are also very, very lucky to count on a vast network of contacts across Canada, and we leverage those connections by introducing our members to our contacts in the private and public sectors and facilitating trade and investment relations and strengthening the relationship between the two countries. Okay, what else? I just want to finish by saying that as we celebrate 50 years, we're really happy to expand our family, and now the Chamber, the Brazil-Canada Chamber of Commerce, has representation coast to coast. So the Atlantic, Toronto, Ottawa, Manitoba, Alberta, and BC. And here in BC, my co-chair Ingrid Polini and I, we are extremely lucky and honored to count on the support from the Brazilian government, the Brazilian Consulate General here in Vancouver, who's always supporting us and joining us in our events. So with that, it's a great pleasure to invite the Ambassador Renato Mosca to come to the stage and say a few welcome remarks. Ambassador, please.
Good morning. Thank you very much. I would start thanking BCCC for this invitation and for the opportunity to exchange ideas. Of course, my knowledge about mining sector is very limited, but I'm here more to learn than to speak. But I would say I would tell you some aspects since I came to Canada 1.5 years ago. When I took office in the Consulate General, I understood that it was very important to focus and to work to give visibility to the West Canada, to the provinces here. Of course, everybody knows West Canada, but in general, the focus is Toronto and the East Coast. And this was something very important. And in the beginning, we made contact with BCCC to start a plan to open chapter here in the West Canada. And we are achieving some objectives in the last months. We have now a chapter of BCCC here in Vancouver with Fernanda and Ingrid. And this is very important to raise the knowledge, especially to Brazilian government and entrepreneurs to, notice the importance of this part of Canada to the Brazilian Canadian bilateral trade and business. Besides the chapter here in Vancouver, we have a CCBC Brazilian hub in Edmonton, hosted by the University of Concordia in Edmonton. This is an important step to help or to improve business and trade, to help entrepreneurs to know the reality here and the legislation and all the support. And we have chapters in Calgary from both chambers of commerce, BCCC and CCBC, based on Sao Paulo. And this is incredible. I noticed the difference of commitment to this part of Canada in the last year. And I'm very glad to be part of this process in partnership with BCCC. And for this reason, I'm here. I should say that this event was the earliest event I have taken part in Canada since I came. 8 o'clock. Diplomats are not used to wake up very early. And I stress as well, and you know better than me, how important mining sector is to both countries and to our bilateral exchange. Just to quote some official data from Brazilian government, in 2022, our Brazilian exports to Canada raised 10%. It's not much, but it's important. Canadian exports to Brazil doubled 100%, especially in fertilizers. 72% of Canadian exports to Brazil, around $3.5 billion American dollars, are fertilizers. Our bilateral exchange grew 40% in the last year. So this is enough to understand how important is the sector, because half of Brazilian exports to Canada are gold and alumina, 50%, 1.2 billion. We have 10 billion both sides in trade. And this is very challenging because there is an enormous space, an enormous untapped potential for Canadian companies to invest in Brazil, to explore minerals, important minerals for the new technologies, and of course it's vital to Brazil to receive from Canada fertilizers, because we are one of the leaders in the world in food production. So I'm very optimistic about these provinces. Canada is a rich country. This is a rich part of the country. It's impressive how I went to Alberta and Saskatchewan to visit some cities, and it's really impressive how they are investing not only in exploration and technologies and artificial intelligence, and well, you are in the vanguard of the development for this millennium. So I thank you very much for this opportunity, and I want to say that the Brazilian consulate here in Vancouver is opened and very collaborative to help in any need companies have here. And I have some cards here. My colleagues are here. My deputy, the deputy general counsel, and they're responsible for mining sector and energy in the consulate. And this is part of our job, and this is part of our mission. And let's move on. Thank you.
Thank you so much, Ambassador. It is great to hear you've witnessed increase in trade and investment and commitment to bringing together the two countries over the past month. So we want to see more and more of that. And we will keep in mind next time when we start our event a little bit later. Thank you so much for your support. Next, I'm really happy to introduce a commodity outlook. And I would just want to ask Ingrid, can you help me with the... for that, we have... I can't open this. Okay, so is he online? Yes, good, excellent. So for our next session, then we have, we're really, really honored to count on the presence and virtual presence of Octaviano Canuto. Octaviano is a renowned author, a researcher, and a thought leader that has had extensive experience, very impressive experience with as executive director and vice president of international multilateral organizations such as the World Bank and the Inter-Development Bank. And he is currently a senior fellow of the Policy Center for the New South. And he's also a professor at the Washington University. George Washington University. Apologies, Octaviano. So with that, Octaviano, you have the floor.
All right. So good morning, everybody. It's a pleasure to be again at the BCCC. And I've been asked to take a look at the prospects with respect to commodities. And I prepared some slides that might help us in that regard. Let's just a moment. Okay. Now, the idea is to summarize in as short time as I can what are the prospects for the commodities this year and in the next ones. In a nutshell, if I may summarize in one sentence, I would say that we are just a moment, I've got a problem here. Suddenly, okay, no, it's good. That we, oh, sorry, okay, you can see my slides, right? That we are reasonably bullish with respect to the commodity price this year and then in the next few ones.
Octaviano, we can't
Yes.
really see your slide. It's all blacked out now. You might have changed the screen.
Oh, right. Okay. Let me return then. Apologies for that. Let me stop share and let's
We
do
all
it.
got used to Zoom with some Zoom issues in the past 2 years. It's all good.
What happened? Well, my slides have been closed. Jesus. Oh, just a moment. We'll get them. Okay. Now you have them back, right?
Yes, we do. Thank you.
Okay. So what I will, in a nutshell, try to highlight is the fact that we have a combination of macroeconomic environment conducive to an increase in price of commodities, and as well as we face a situation of low inventories and supply constraints, and that's why the presentation will be reasonably upbeat with respect to commodity price. So the point is that, last year was, as we recall, a year characterized by intense shocks and a lot of volatility. That's something that is, as depicted in this chart with the evolution of the commodity price indexes since December of 2020, right? And obviously the post-pandemic recovery together with widespread supply constraints ended up letting the commodity price to go up, particularly in the case of energy, right? And then we had this year the shocks derived from the invasion of Ukraine by Russia, right? But followed by a lower a second half of the year, where we had a decline of price due to not only rising interest rates, but also lower demand. But the outlook for 2023 is very positive as China reopens amid low inventories. Just to give you an idea of how upbeat one can be, this is something brought in by a recent note by Goldman Sachs, referring to 2023 as the third year with a track record of outperformance of commodity price. This chart, for instance, compares with the composite NASDAQ, and it shows clearly how, while last year was a bad year when it comes to stocks and so on, commodity price managed to keep up a high return. Just to give an idea, this year, the commodities sector is looking at superior total returns, and expected to outperform all the other asset class. I follow very closely the Goldman Sachs analysis, and they are seeing the S&P GSCI commodity index to offer returns close to 10% over a 3-month period, 17% over a 6-month period, and 31% over a 12-month period. And one may note lack of supply in every single market we look at, whether lack of supply because of inventories very low, or operating levels or production capacity clearly exhausted. So that's why the performance is, well, of course, this is a broad assertive, and we will have a strong differentiation among types of commodities. I'm just giving you a snapshot here of the top 10 best returns last year, quite differentiated from coal, unfortunately, to other assets, and not all commodities had such a performance. As you can see, in some cases we had negative levels. But the question is, where are you with respect to the expected super cycle of commodities? As you may recall, since the beginning of the pandemic, and as the commodity price hikes surprised many people, talks started about, are we starting a new super cycle of commodities? There's something, for instance, that I took from Don Sullivan in 2020 with a recollection of previous historical experiences with super commodity cycles, right? And as you can see, he was very much upbeat during the depression provoked by the pandemic. But there is some foundation for such a belief. Look, my generation of economists studied my undergraduate in Brazil. Started with reading a textbook by Nobel Prize Paul Samuelson that started with a reference to a parrot, and he said, you may teach any parrot to become an economist. It suffices to have the parrot learning two words: supply and demand. And the super cycles of commodities can be understood as such. You have occasionally moments in which the demand for commodities stays very much elevated for structural reasons, and we can associate each one of those super cycle of commodities to different phenomena. The last one here, of course, had to do a lot with China's rise, and while on the supply side, there is a time lag in responding to the stimulus coming from demand, in the sense that you don't raise the supply capacity from night to day, and until when supply responds, then that's when the commodity price cycle turns into the downward phase. And the fact of the matter is that, as we saw in the latest commodity super cycle, we had the 12-year up phase of the cycle. With the global financial crisis, we went downward. This average here was maintained as such because of the resilience of oil price until the shale gas and oil led to the downfall of oil prices, and when we went through the process. And the presumption, which is something, let's say, shared by many analysts, is that the uptick after the pandemic could be the beginning of a new stage. It's important to highlight that, as the Goldman Sachs and Bloomberg do, that the super cycles are not permanent spikes. As you can see in this comparison here, of course, this was very much special after 2020, among other reasons, because of the shock that we faced last year with the invasion of Ukraine. And but the fact of the matter is that even the downfall in the second half of the year, which reflected not only the interest rate hikes and the inflation and the response by central banks hiking interest rates, but also given the fact that the worsening financial conditions also reflect themselves in the commodity price markets and so on. But this does not preclude the possibility that, as I try to argue here, that, for instance, 2023 will be a year in which prices tend to go up in most commodities, if not all. And one of the reasons for that, very much in sync with the story of commodity super cycles that I mentioned, has been the underinvestment underinvestment, as I will highlight, because of sector-specific reasons, but also something associated with the fight against climate change and the issue of carbon emissions. Why not? Look, when I say underinvestment, this can be seen in the low levels of capital expenditures in oil and gas, and also in metals and mining. In fact, this is very much manifestation of the low levels of investment. In the case of oil and gas, for very good reasons. In fact, we know that the agenda of climate change will, hopefully in a successful way, shift the energy composition in detriment of fossil fuels and in favor of renewable energy and so on. And anticipating that, many investors have shunned from making further investments in oil and gas, which creates a sort of a problem because at the margin, the replacement of oil and gas with renewable energy will not happen from night to day. There are still remaining cost inefficiencies. There will be the challenge with respect to the availability of critical minerals as we will approach a bit down. And that's the main reason why investors have shunned from making investments in oil and gas. But the problem is that during the transition, as we saw last year, and as we saw right after the pandemic, is that there is a shock between the rising demand and the unavailability of supply. And last year we had the commodity price story dominated by the evolution of the dollar. As the dollar went up, the commodity price went down differently from other moments in history. But now with the change of path of the dollar, we don't have this kind of correlation acting in this favor of commodity price. And we saw last year how the recession risks started to be reflected not only in the yield curves of interest rates, but also, let's say, the oil curve, that is to say, became contango in the sense that the first backwarded in the sense that the future price went down the hill vis-a-vis the spot price, but then this has been to some extent reversed, and it tends to be like this. Let me run a little bit fast. 2023 should be an year with a lower volatility than last year, to some extent because the interest rates have gone up. I am among those who believe that, like Goldman Sachs here, but it is not the only one. But this is not the predominant view anyway. That the Fed will hike interest rates until a level of basic rates in the range of 5 to 5.25 base points percent, and the signs of inflation, the current ones, bode well in terms of gradual decline of inflation. The core index are still resilient, but gradually, if not this year, the inflation rate in the US will not go to 2% this year, but the tendency is to decline. And all this leads me to expect the interest rates established by the Fed to reach a plateau by March on 2025. Sorry, 5 to 5.25%, and stay there for long. I guess the market is too much optimistic, expecting that the Fed will start declining, but all the signals coming from the Fed point to the maintenance of this interest rate at that level, at least for the remainder of this year, even if with the risk of provoking some sort of a deceleration higher than the baseline. But ultimately, volatility will be lower in the sense that interest rates will have done its job. And in Europe, as you know, a good surprise in the sense that the winter has not been very cold, so the consumption of gas has not been too large, and energy price fell. The policies with respect to gas use have also clearly succeeded, and the fact of the matter is that the scenario is less dark with respect to inflation in Europe and with respect to energy crisis than it was the case, let's say, if we were speaking 2 months ago, right? So anyway, less volatility. Well, as I said, carbon emissions matter in this scenario. This is another way to show how some segments, some sectors have, particularly the sectors associated with high carbon emissions, have seen underinvestment in the last few years, as depicted in this chart, including mining and metals, steel and oil and gas producers. While at the same time we know the humongous needs of investments in terms of in order to meet the carbon targets this decade. This is really imposed. And that's what leads us to talk about upside risks, as the trajectory, for instance, to net zero would require, just to give, using copper as an illustration, a huge demand, a green demand for from solar, wind, and electric vehicles, demanding a lot of copper, which is in contrast with the availability and the capacity of the sector to respond. Well, let's also put in the picture the Inflation Reduction Act by the US, which will bring an enormous increment in the energy spending because of the investments in infrastructure and so on. Let's look a bit on specifics. Oil and gas. This is just a depiction of the huge uptick since the beginning of the pandemic, right? And this is, I follow very closely the reports done by the New York Federal Reserve Bank with respect to determinants of the evolution of oil price. And as you can see, and this is a calculus showing how both supply and demand factors were lying behind the evolution of the oil price in the recent years, and they will remain like that. So even though the oil price have declined since the mid 2022, they remain volatile, right? But the prospects are, as estimated by the Economist Intelligence Unit, using some data with the World Bank, they tend to stay elevated in 2023. I'm using here, several of the different price reflecting their specificities and so on. Natural gas is a case apart for the obvious reasons. As I said, the natural gas price have come off the historical highs, but they will remain elevated. That's a point that cannot be denied. Oil stocks have declined. The response on the supply side of oil haven't also not been helpful with respect to price, among other reasons, because the reaction by the OPEC has been to announce and curb production levels as a response to the decline in demand and to avoid this process to deepen even further. This shows such a dramatic, substantial decline of the OPEC share of total oil supply, and so even so, and the problem is that outside OPEC, even if there is the opportunity for the non-OPEC producers to increase their share, and the problem is that you have low oil spare capacity. And I'm not talking here simply about Venezuela, but the fact of the matter is that there is no idle capacity available to respond to demand, which is a factor pulling up tendentially price of oil. Now, metals and minerals. The same thing, that we said, the price for hard commodities after recent sell-offs also tend to go up. That's the case here for fibers, base metals, natural rubber, and else. Copper price have come down, but it's a contango. That is to say, the future prices are pointing to higher prices ahead, and that's the expectation by any curve of those that you look at. And this has to do with the imbalance with respect to copper. There is China and China's reopening, and possibly featuring a growth rate this year in the range between 4.5%, which is the forecast offered by both World Bank and IMF with the reopening, or to JP Morgan or other banks that talk about something above 5 or even close to 5.5%. Fact of the matter is that the demand for copper from China will compensate, let's say, an eventual low, let's say, demand coming from US and the euro. The same thing applies to aluminium. The increasing demand from China will offset the headwinds faced by on the European side. And just keeping on with my examples, iron ore, which has the price of iron ore have rebounded from the recent lows, and something interesting, Brazilian production, which interests to us here in this discussion, is still well under potential as estimated by BTG Pactual, right? And well, again, back to aluminium, stocks inventories remain very much low on a multi-year estimate. Well, and the same applies to, I'm using here nickel as an illustration of moving on to more other non-traditional or critical minerals. Nickel is to be boosted the demand by the penetration of electric vehicles. Look at this in the case of China, where the electric vehicles are already rising as a share of the automobile usage. And see, this is a snapshot on the following, which is a big challenge to conclude my picture on metals and minerals. This is an estimate offered by the IEA, by the International Energy Agency, on the demand of these critical minerals, right, and the metals and minerals, as if the energy transition is to follow, let's say, the basic scenario depicted by the Energy Agency. And as you can see, it's a humongous increase in the case of the demand for some of those, which will be a challenge given the difficulties to increase the supply of that. I think of cobalt, where the RC responds today for 70% plus of the known reserves of cobalt. And this is such an important matter for Canada as well, and for Brazil, right? The same applies to related commodities such as pulp. There is clearly an imbalance between the consumption growth and the capacity growth in the area, which bodes well when it comes to price. Fertilizers, very briefly, we know the story of last year, the spike in the fertilizer prices, partly because of the restrictions on supply, and partly because of the transmission of energy prices to fertilizer prices, right? Since some types of fertilizers are very much energy intensive in their production. This is just an illustration with some input costs of fertilizers that last year, just to illustrate the transmission. And obviously as well, the supply restrictions on Belarus, Ukraine, and Russia, which were quite important to explain as well the spike in fertilizer price, and the restrictions on exports from China as well. And the fact of the matter is that this has had implications when it comes to food prices and so on. Let's just give it a look. Even with the Black Sea logistic pacts and so on, the exports of corn by Ukraine will remain, let's see, vulnerable to restrictions and so on. They made it easier last year to solve the quandary of rising food prices and so on but this is much vulnerable. And you know, while we had the price for soft commodities trending downwards in the second half of last year, but they still remain high. This is the point. Even if on soft commodities is harder to ascertain any kind of super cycle, but prices are not going down and so on. And we have, of course, the higher frequency of adverse climate phenomenon, the more intense droughts, as we saw in the last 2 years, ranging from China, India wheat production facing temperatures at the soil and close to 45 degrees Celsius. Brazil, which had faced droughts and now excessive rain anyway, but several years of consecutive droughts. Argentina and so on. So the relevance of and one cannot deny that maybe climate change is already showing itself in the higher frequency and intensity of a severe weather phenomenon. This will remain as a factor to be taken into account when it comes to food price. So, sorry if I hope I went too long. But the point is that after a year like 2022, subject to so intense shocks on the supply side, and from the adjustment to inflation made by central banks, looking forward, we do have a tendential scenario with tendential upticks in price of commodities because of, on the one side, the underinvestment in the recent period of history, but also rising demand, particularly as China returns, and assuming that the US and Europe manage to live behind the high inflation period and can start growing again. We have this combination of supply constraints and strong demand pulling up the price of commodities, and that's why Goldman Sachs is so upbeat. Not only Goldman Sachs, and with the talks about another stage of the super cycle of commodities that is starting. Yes, okay. Thank you. And this is just an advertisement of my own personal website.
Thank you so much for your time. We really appreciate it.
Thank you.
Thank you. Awesome. So I will introduce to you now our panel. So we are going to have a leadership panel today. And I would like to introduce first, and I will be moderating it as I was introduced by Fernanda. I'm Ingrid Polini. I'm the CEO for Safety Docs Global, as well as the co-chair for BCCC BC. I know it's a long name, but basically the British Columbia chapter. So I want to introduce Nicole Achad-Bell. I hope I'm saying this right. Lead independent director at Bravo Mining. I want to introduce Anthea Beth, COO at Aerocopper. And Jesse Liu Ernstein, Director of Investors Relations at G Mining. And I hope I said all those names right.
You
said it perfectly. I said it perfectly. Okay, I just want to make sure. Awesome. Thank you. Just want to add the video here.
Hello? I have a naturally loud voice. I don't think I need one.
Unfortunately, I'll be up here today because I just want to make sure everyone has a microphone because you all have a lot to tell me. So I want to start asking you to introduce yourselves because I think that there's nothing better than you introducing yourselves. So let me just turn this off here for 1 second. Sorry. Let's just do it without it. Okay. Perfect. So can we start with you? Let's go around and introduce yourself and your company, please.
Sure. First of all, thank you very much. to the BCCC for inviting us to speak today. It's a pleasure to have this opportunity, so we appreciate it. Next year we need to round up a lot more attendees to ensure that we've got a jam-packed audience. So I'm Nikki Adshead-Bell. I've been in the mining industry for plus 27 years, a geologist originally, before turning to the dark side, to the investment side, and then a long pathway to end up where I am today, which is really probably focused on advisory and consulting work in the mining industry, but also sitting on a number of boards. And I'm here today representing Bravo in place of our esteemed leader, Luis Azevedo, a Brazilian national who resides in Brazil in Rio de Janeiro, and he couldn't be here today. And Bravo, perhaps relatively unusually, is a Canadian listed company listed on the TSXV. We're brand new. We listed IPO'd last year in very, very tough market conditions. We raised a substantial amount of money. We positioned a large number of investors, including some very well-known international resource investors. And I think what that showed is that we were able to raise money in a very, very difficult environment, and that was due to the quality of the asset in Brazil, but also a quality of the leadership team. And so Brazil is a company that is founded by and is populated by almost entirely Brazilian nationals or people who reside in Brazil. The leadership is Brazilian. We have a early advanced exploration / early development stage project in the Carajás of Brazil, who I'm sure the audience is very familiar with. It's an area that has got some of the world-class iron ore mines and copper mines in the world. We are blessed with a huge amount of infrastructure. There's very few deposits that you can leave a major or regional centre, you can access commercial flights and arrive at within the same day. And having visited hundreds around the world, this is a unique one in terms of access. And we also have existing infrastructure in terms of Brazil, as I'm sure everybody is aware, is energy independent, something that's become critically important as we've seen with respect to European countries. And so we've access to energy. It is clean energy. Most power in Brazil is on the renewable side. Water is abundant in the northern part of Brazil. So again, water scarcity is a very hot topic in the mining industry. We also benefit enormously from the fact that there is a very sizable skilled labour force that is proximal to the project in the town of Parabépice. So one thing that behooves anybody that is working in another country is to ensure that you use as much local resources as possible, and including labour and obviously as suppliers as well. And the project is called Luanga. It's platinum group metals, potentially a commodity mix that people are less familiar with. So it's palladium dominant with rhodium, platinum, nickel, and we've just recently discovered some massive sulfide nickel copper mineralisation, which we're all very excited about. And really what our aim is to do over the next 18 months to 2 years is to leverage off very high quality exploration that was done by Vale. It's an ex-Vale project. About 20 years ago, there's a sizable historic resource estimate there. It's a very, very large deposit, unusually so. And our job is to discover how big this is. And we have a team that has been involved in building and operating mines in Brazil, and a lot of experience on the permitting side. And so we hope to advance the project while ensuring that we engender wealth for the local communities.
That's amazing. Thank you, Nikki. Can we go for you? Yeah. Thanks.
Hi, is that better? Hi, I'm Anthea Barth, and thank you very much for having me as well. I'm very grateful to be here. Thanks, Ingrid. I'm from Era Copper. I'm the COO at Era Copper at the moment, and very proud to be a part of a company that has assets fully in Brazil. We've got 3 different mining areas that we're working on at the moment. We have, I'm sure you're aware of the Minas-Sacareba complex, which is up in the Bahia district. It's got 3 operating mines, 2 underground and 1 open pit mine that we look after there, with some big projects to grow them further. Then we have a little gold mine up in the Mato Grosso region, which is a little precious asset that we love to look after. And there's another little project that we're working on up in the Para region, which is our copper operation called the Tucumã project. Era Copper's been in the market, obviously they're dominating and pushing to try and drive mining and try and drive project execution. We've been largely focused on exploration as well as project execution, and trying to grow the business organically through that. I think you would have noticed that we've actually announced a nickel discovery as well, as in amongst the work we're doing up in the Curaçao Valley. But I'm very proud to say that I'm lead the team that actually looks after the execution of the mining area as well as the projects which is comprising of about 3,000 to 4,000 people that work for us directly or indirectly. We proudly say that we work in Brazil because we love working in Brazil. We believe it's a jurisdiction that gives us a lot of comfort and a lot of growth. So we see ourselves being there for a lot longer. And I'm looking forward to talking some more. Thanks, Nick.
Amazing. Thank you, Jess.
Yeah, thank you for having me. And yeah, similar to Nikki, unfortunately, our CEO couldn't be here today either. He's actually in Brazil on our asset. Yeah, so just going back a little bit. So my name is Jessie Liu-Ernstein. I come from an engineering background, and similar to Nikki, also turned to the dark side and started doing mining finance and strategy work. And so for the past 3 years, I've been on the corporate side. And so our company is actually pretty new as well. We listed just over 2 years ago, and just over a year ago, we, after scouring thousands of assets around the world, settled on the Tocantinzinho project, which is located in Pará state in Brazil. We acquired it out of Eldorado Gold. And they did a lot of good work over the past, their ownership of the project. And so we were very lucky to leverage the good geological work and community relations work that they've done. And so very quickly was able to, in the interim, I guess it's probably 16 months since we've owned the project, to update the feasibility study on it based on 2 million ounce resource, 10.5-year mine life, and we're well on our way to development. We raised almost $500 million last year, also in very tough market conditions. So speaks to, again, similar to Bravo, the quality of the management team, and more importantly, the quality of the asset and the comfort that people have in investing in Brazil. Yeah, so we are almost completed our procurement, and a lot of that is also from companies in Brazil. And we look forward to pouring our first gold in 2024, so only next year.
That's amazing. Thank you. I would love to ask a second question. I had the pleasure to talking to them, and they explained a lot about their industry that I'm not an expert at, as well as a lot of new information that, being insiders for so long, know a lot. So I would love to start with Anthea to ask, what do you think are the biggest challenges the mining industry faces today?
I think the biggest issue we have, obviously, is making sure we got the right skills when we try to execute on various projects. And I think that goes around all the stakeholders that you need to actually make a successful project or successful mine. So in our world, really, I mean, we continue to try and really push things very quickly, and that requires the ability to pick up skills and pick up commodities and pick up products very quickly and at a very short time frame at the right level that we need it. This month, as we know, is National Mental Health Awareness Month in Brazil. And I think that is something that we as an organization, spend a very lot of time worrying about as well, because our people are constantly, under pressure. We have to look after our people. We've got to consider, what's important to them. The safety of our people, obviously, is fundamental and critical. The connections into the community is critical. So I think, really, if you ask me the challenges, it's really focused on how we as an organization engage holistically with all our stakeholders, ensuring that we are looking at them holistically and enabling our people to feel a part of the journey with us in the most substantial way.
That's amazing. Nikki, do you want to go?
We're sharing the microphone. We work together in the mining industry. I think that the mining industry as a whole, it faces probably existential risk, and that risk manifests itself in the form of reputation. And that's because there's a real disconnect between the mining industry and its reputation and the average person understanding where the stuff comes from. My sister, who's a cultural anthropologist, so is a certain political bent, I think she said it the best, is that you can choose to be a vegan, but you cannot choose not to be associated with the products of mining. So first and foremost, as at any kind of these events, it's a call out to our industry to be more proactive in talking about what we do in a positive light and perhaps being a less of an apologist. And so reputation, number one. Number two, we live in a world where capital moves, and it moves very, very quickly. And so a company like ours that isn't producing, that isn't generating free cash flow, has to survive by equity financing, essentially. And so that means that our company has to be attractive to equity investors that can put their money anywhere in the world. And so that level of attractiveness comes down to a whole bunch of things, but one in particular is, what is that investor's level of comfort with the country where you're working in? Obviously, in this case for us, it's Brazil. So there's this reputational element, it's an ability to attract capital element to drive your business. And then also, I think another is, at the end of the day, investors, they want to feel secure that a government or a company can just do what they say they're going to do. And so have security that the goalposts aren't going to be changed. And by those goalposts, I mean taxes and royalties aren't going to be changed after an investor has put money into a company. And so if we step back, it's trying to de-risk. There's obviously commodity price risks and other risks, but de-risk some of these outside elements that are within government control that then percolates through to available of capital. And if I was a government and I look around the world, ultimately, and resources are owned by a country, but if someone else is funding the development and advance of those real resources, it can be seen as a win-win situation. It is. It's an economic win for the government in the sense that there is foreign investment that is funding direct employment opportunities, training, there's taxes and royalties, and at the end of the day, supplying commodities that are a fundamental function of the part of our existence. And I could wax lyrical about this for hours, so I'm going to shut up right now.
Yeah, sure. I feel like Nikki just painted a kind of a picture of what the ideal, industry would be for mining. But so my points are very similar to you guys, actually. So I sit on the board of PDAC, and one of our, sort of our mission that we talk about is to ensure that mining companies have access to the land, the people, and the capital that we need, right? So those are sort of three of the key ingredients to ensure a successful mining company and mining industry. And so I think I absolutely agree that it comes down to, when you look at sort of some of the root cause of some of the issues and challenges we've faced, a lot of it comes down to reputational issues and credibility issues, right? So when sort of maybe a couple of mistakes made by companies that had missteps are then painted with a broad brush, across the industry to companies that are good actors. And so, yes, we do need to be out there, trumpeting the good things that we're doing as an industry and as individual companies as well. And then, of course, we also need to have the credibility of, doing what we promise, the local communities, the governments, and all the other stakeholders as well, taking care of our employees. And then, yes, it's also a two-way street that, governments also do have that responsibility to be credible as well, right? Living up to perhaps, stability agreements and things like that, and have that, strong, I guess, regulatory framework that they, operate within.
That's amazing. Thank you. So we are in a unique opportunity here because we're talking about the Brazilian Canadian Chamber of Commerce, and each one of the representatives here has a company with its key assets in Brazil. So could you comment on Brazilian specific challenges that you may have faced working with mines and working in the Brazilian communities and all that? We can start with you, Jesse.
Oh, sure. Yeah, so I guess, we, top of mind is our feasibility study is only just under a year old. We produced it in February of 2022. And I just recall in preparing that feasibility study, some of the really heavy lifting you would think comes in, sort of the form of technical, design and things like that. But some of the heavy lifting actually came in trying to understand kind of the taxation, structure and building that into our financial model and having it sort of reflect, the eventual reality. So, it's not really, I guess, a challenge that's insurmountable. Really, it's just something that people should pay attention to when they're, evaluating investments in Brazil. Just make sure that you kind of understand those aspects. And now, we are in the middle of hiring a pretty big local workforce as well. So at last count, we have close to around 800 people, and 99% are Brazilians, and over 70% are from the local direct communities. But we do find, in speaking to our HR director, there's a different kind of culture in applying for jobs. For instance, here we're used to listing very specific, job requirements, and then people apply to those based on their qualifications. But in Brazil, a lot of that happens through social media comments and go, hey, do you have a job? I like this project. Or, people might WhatsApp people. And so it's just an interesting, different kind of culture. And so it's really helped, that kind of organic interaction has actually helped with us to be able to recruit so many Brazilian workers.
That's amazing. Do you want to weigh in?
I'm going to just add to a little bit what you were saying as well. I think, again, the taxation issue you mentioned is something that we also learned a lot. And I come from the South African mining industry and been in that for the last 20 years. I don't see challenges in Brazil being very different to what I've seen before, except, in fact, I see Brazil being easier in many ways to work in. But the taxation side was something that really was interesting to learn and to understand. How do you bring equipment in? How do you bring skills in? If you need to bring, people from Canada to support on certain projects, what are those taxation limitations and what does it mean? Have you skewed your project incorrectly because you didn't understand that correctly? And it's something you only learn as you work closely. But there's ways of getting around it, because if you have a good team in Brazil, you'll figure your way through that, and they'll help you through understanding how to solve this and how to work with this. The other thing I learned, it's not a challenge, it's an opportunity, is how do you work alongside the government to drive, some of these opportunities from a taxation perspective and pull your suppliers and supply chain into the market correctly with you. It's not something that will be done without a lot of support from the government there. And I think there should be, and there is, a concerted effort between government and organizations to do that. On the people side, it's interesting because these mines are, I didn't realize how big Brazil was until I started working there either. It takes me 12 hours to get from Sao Paulo to our mine. It sounds crazy. And then to get to another one, it takes another 12 hours. So you're in transit for 3 days out of a 7-day week before you've even done any work. The question is, how do you get people to want to work in these areas? And what we see is when we are opening these mines, you have very young, enthusiastic people coming along, and they're fantastic. The people in Brazil are amazing. I love going there. I feel like I'm at home. The question is, how do we engage and do skills transfer in such a way that we get the skill levels at the right level for a project in the regions that we actually need to be working in? So I don't think these are problems. They're just opportunities, if you ask me. A thing that could be done, that could be interesting, is how you could look at attracting people to different regions in these areas through relationships with governments. This already happens at Aerocopper. They work closely with their different government departments and stuff like that. But how do you create a school that actually is the best school to work in or to have, so people want to work there? How do you create the best healthcare facilities so people want to go there? And I think that will encourage more development in mining, which could see more opportunity and more investment.
That's amazing. Nikki?
Every country in the world has risk. That risk manifests itself in different ways in each country. And again, I'm going to circle back to a theme here. Local knowledge is paramount. And so I think what we've seen when there's been some hiccups with foreign companies that are working in Brazil, Brazil gets blamed. And if you dig into understanding those situations, the commonality is it's not a Brazilian issue. It's a lack of understanding how to work in Brazil issue. And so I suppose the one thing that I say to our investors, and if I am in a fortunate position of being able to represent Bravo, is, in my experience, having Brazilian leadership at all elements of the company, circling back to that local knowledge, is absolutely critical. I mean, you wouldn't go into Australia, for example, without ensuring that you had specialist and local knowledge. And I think a lot of these problems, if you have the appropriate expertise, they're not problems. It's just working within the context and the confines of that individual country. I think Brazil, there's a little bit of a mismatch between Brazil's reputation and the reality of working in Brazil. And maybe that's a little bit of xenophobia. I think if you're from the other, there's an idea that Australia and Canada and the US are safer jurisdictions. I would argue that that's absolutely not the case. So local knowledge is particularly paramount. As Anthea said, there's enormous opportunities in Brazil in some ways. It's a very large population. It's 5 times the size of Canada. It's the 5th largest country by mass. It's got almost any commodity that you can possibly think of. There's a world-class asset in Brazil. It's got power, energy independence, which is a rarity. It's got water abundance, which is a rarity. It's got a huge amount going for it. I mean, I gave a talk in Brazil recently saying that Brazil could become a global superpower. It's got all the ingredients to do so. And maybe the question to ask is what's stopping Brazil from doing that? But as a foreign company going in, it is our obligation to ensure that we have the appropriate people in the appropriate positions that understand how to work most effectively within that country, and then perhaps be positive messages about what Brazil has to offer. Well, maybe not, because we don't want to increase that competition. We think we have a bit of an in Brazil. So, and I think to both Jesse and Anthea's point, I've been going back and forth to Brazil for work for the last 12 years, and it's been incredibly enjoyable to get paid and go and visit different assets and different commodities around the country. I think what Brazil needs to ensure that there's clarity and crystallization of focus. We've seen this movement, strong movement to the left in Latin American countries and through the last election cycle, and that has manifested itself in increased insecurity about what does this mean for mining. And so there's a lot of lack of understanding maybe, and also fear about what will Brazil do with respect to mining. And so I think sometimes people don't understand that, unlike the Queensland government in Australia, which whacked a 40% royalty onto their coal miners, it's very hard to change royalties and taxation in Brazil without the approval of Congress. So there is some natural checks and balances. But if, again, same message to governments is don't constantly change the goalposts. This is about attracting foreign investment that feel comfortable supplying long-term capital that can advance assets to the benefit of everybody. And just sort of circling back to, again, it's a challenge and an opportunity. Your challenges depend where you are in Brazil. We specifically benefit from great access to people, but the one thing that we're very, very focused on, back to train, is in ensuring that, for instance, that we're focused on trying to train people from the local municipality, and then that our workforce is drawn as much as possible from the local municipality, then through to proximal areas, and then to Pará State, and then around Brazil. And so it's really ensuring that when you're there working in a country and you're a guest of that country, that there's a direct, visible economic benefit that's not at some point out in the future. And we're a small company, we are in this exploration stages, and so our ability to spend big dollars is very, very different to Aerocopper's. But we're trying to do as much as we can on a small scale to ensure and build and engender that trust.
So I'm going to ask a little bit on the flip side, but I asked about the challenges, and you also talked a lot about the opportunities, and I love that. But is there anything else you would add in terms of opportunities with working with the Brazilian market, and anything else that you would like to highlight in that aspect? We can start with you, Nikki.
Sure. Actually, talking about exchanges, we're here as we're all companies that are listed in Canada. I think there is an opportunity for Brazil to try and attract resource companies to list on the Brazilian exchange. It's currently quite difficult to do that because there's a very large size hurdle, plus a half a $1 billion market cap. And so there's Brazilian companies and Brazilian management teams that are having to list and go to different other financial markets other than Brazil. So I think there's a lost opportunity from that point of view. And those companies that have listed in Brazil, a more recent example is Aura Minerals. It's been a very, very positive experience for them because there's a paucity of gold mining companies on the exchange, and they've attracted a lot of investment, which has helped their valuation. So that's, I think, an opportunity. And I just think, again, just circling back to, and this is not just a Brazilian issue, it's a government around the world issue, is to have clarity and security around when someone is investing a lot of money into your country, that those rules don't get changed every time that there's a new government, or it's about stability. At the end of the day, is something that attracts long-term and permanent capital.
I'll say it again. I mean, Aerocopper is currently investing, I think, close on $1 billion over the last couple of years going forward. I mean, it's a significant investment, US dollars, obviously, into that market. So clearly we see the opportunity of working in Brazil. It's quite obvious. And I think when you look at it, you see just what you said earlier as well, the resource endowment that the country's got, the people, and all the other infrastructure opportunities you speak of, it's there. I personally don't understand why. I remember driving for my first time in Brazil, looking out and saying, holy God, look at this place. This is so beautiful. There's just so many opportunities here. It really is. It's a fantastic country, a country that's got great opportunities. We will continue to look for them. We'll continue to throw our exploration geologists at it as much as we can, and hopefully we'll, from our side, keep exploring and delivering on the projects as we do. But I think the big thing is to make sure that we engage and integrate correctly, because the thing I didn't mention at the beginning, which I think is critical, is you get it wrong from a project perspective, you lose your license to actually be successful as an organization. So for us, it's really around how we ensure that we discipline in the way we execute on both a business level as well as a project level. And I think that goes for anything.
Yeah, so in my seat as in investor relations, I do get a lot of inquiries from, anxious investors asking the question of, how do I, feel comfortable putting capital into Brazil? So similar to, what Nikki and Anthea have been talking about. So I really do think, so as mining companies or listed mining companies, we talk about there being a re-rating opportunity for, companies that go from exploration to development and then from development to production, re-rating in terms of our stock value, right? And so I really think there's actually an opportunity for Brazil to have that re-rating opportunities as well in terms of, image. It's sort of, I feel like it has an undeserved, perception or image sort of challenge in terms of kind of lumping it together with some other countries that don't have that level of stability or that maturity of the democracy. So I think there's sort of a misunderstanding from the public. A lot of people don't understand how big and how well endowed the country is and how well, educated a lot of the workforce is. And that's why they ask these questions and they go, there's an election, what's gonna happen? Or, there's people, protesting at a Congress building and what's gonna happen? And is it affecting your mind? And, and again, it's sort of people not understanding just how, massive the country is and how stable it really is. So I think, similar to kind of the mining industry where we have a image issue that we need to educate people on. So I think there's an opportunity for Brazil here as well. And I think, organizations like BCCC and, obviously the consulate as well are, doing a great job in putting together events like this. But I think we just need to maybe broadcast that message.
I love that. And getting on a hook a little bit of what you said. So we're seeing that there's a bigger focus on corporate governance all over small and big companies. And can we get we're going to do a Q&A in the end, if that's okay, or do you want to ask now?
Just a quick,
Go ahead.
just a question.
Yes.
How are you doing in Brazil with local communities? How is the law? The law is that you have to consult them. The law is that you have to get authorization from them. How does this function in Brazil compared with the other countries of South America?
So just to make sure that everyone heard him, the question was, how do you deal with the local community? Is there laws or is there specific regulation? Do you need authorizations from First Nations people in Brazil? Or how does that work, working with the local community?
I might just interject the first one on this. It's wherever you are in the world, it doesn't matter what the laws state. If you don't have community support, you will cease to exist as an entity. So that's it absolutely has to be a priority. In Brazil, it's very location specific. If you're within 10 kilometers of an indigenous reserve, then there's a government organization called FUNAI that has to be involved in negotiating on the indigenous population's behalf. If it's on government land, if it's on INCRA land, there's another process that you have to follow. So there's all different types of land designation that dictate the regulatory environment with which you need to work under with respect to community and population level consultation. And I would say it's not too dissimilar to everywhere else in the world. So speaking for Bravo specifically, it's in an area that was deforested 40 years ago. So we're not cutting down primary Amazon trees. If you're cutting down primary Amazon, that's another regulatory body that has to be involved in that, and as it should be. So you, for instance, in the Amazon, you can only ever impact 20% of the property that you own. So you're constantly forced, and it's a good thing, to ensure that you're involved in regeneration and reforestation efforts. So Bravo in particular, it's privately owned land. It was deforested 40 years ago. It's land that's been used for grazing. So not only are we not negatively impacting it, and we're obviously still early stage, so it's low impact activities, we've committed to planting, and this is not regulatory, this is what we are doing, to reforestation efforts. So committed to planting 10 trees for every drill hole that we drill, helping the farmers with their own reforestry obligations. In our case, there's no community living on our project. The closest community is 7 to 8 kilometres away. And so again, where our efforts are, even though that community probably doesn't have a legal right to curtail mining activities or exploration activities, if they didn't want us to be there, would be a very, very serious issue. And so every company everywhere in the world has to really focus on ensuring that you have very positive working relationships with those that are directly impacted by your activities. And that really comes down to, I think, some very simple ingredients. Be very transparent, be very honest, communicate, engage with the local community, and ensure as much as you can, and it's a policy that we have, is to focus on suppliers that are the most proximal to the project. So larger companies, just through their workplace health and safety, might have to use larger entities out of Brasilia or Belo Horizonte or elsewhere in the country. We're very focused on, okay, if we need a dozer, is there a dozer that we can use from a local farmer or a local community? So these little bits of just ensuring that people see you as a net positive, and also so that they very clearly understand what you're doing. And again, this is a company that's run by Brazilians, so there's a Brazilian face to Bravo, and maybe something that's a little bit more of a different approach. So it's Brazilians going and speaking with Brazilians. And so we had a board visit there last year. The board met with the mayor of Curionopoulos, who was the mayor of the local municipality. So just ensuring that they get to see what the company is doing and engaging in, and also investing in local. It's a very poor community that's proximal to us. Football is a sport that's very near and dear to Brazilians' hearts. So we fund for the kids, provide football kit for the local school, and this is for massively increased participation in sports. It's half girls, it's half boys, and so again, sort of helping with workplace, with health initiatives as well. So.
I think that if you want to give your answer, but yeah, do you want to join in? Or?
Yeah, sure. I completely agree with Nikki that there's what the letter of the law states, and then there's the what we call the privilege to operate, right? So the local communities have that sort of influence to do they grant you that social license to operate in that area? So that rule about 10 kilometers away. Within 10 kilometers of an indigenous community, you have to, get approval from FUNAI. There are examples out there where the property is outside of the 10-kilometer range, and there's still, the obligation, to get approval from FUNAI, and there's been, issues that other companies have faced before. So, it really is very location specific and community specific, and, and also environment specific, right? So are you in the Amazon? Are you near a water body and things like that? So that, I think, companies have an obligation to be good stewards of, the environment that they operate within, just like the local communities are, good stewards of the land that they're on, right? So, so we can't come in as, oh, we're gonna just extract this resource, but really it's kind of a partnership, right? So it's, you need to benefit the local community as well as, obviously every level of the authority, the government, the country you're in. So so we do the same thing, right? So we don't have actually local communities that are within even easy commute distance from us, but we still want to benefit the community by, so for instance, that close to $500 million that we talked about having raised last year, our largest funder, which is Franco-Nevada, as a part of their funding package, actually stipulated that they're going to be giving $250,000 US dollars a year on local community and reforestation initiatives. So we donated internet access, and a lot of actually in the north of Brazil, a lot of the cost of living is actually very low. So we some of the leverage to your investment to these initiatives is very high. We donated internet access, IT infrastructure to this local school that has over 1,000 students. And they didn't have internet access or stable internet access before, and now they have that access to a world of knowledge. And so it's just amazing to see that leverage to these efforts.
I can just add, I just think it's just a compliment what the two ladies are saying here as well. I think when you're looking at mining is about the whole picture. It's about everybody. You have no license to operate if you don't look after all your stakeholders, whether they be your suppliers, your communities, your government stakeholders, your employees. So all of those stakeholders have a role to play. And the law's the law. To me, the law's at the end of the game. You should be operating as a diligent, good steward regardless. And I think if you look at the way Aerocopper works, we work closely with our community. We engage in various projects. It's part of the way we do things. It's not even something that stands outside the business. When you're executing into the Para region now, that new project, we have a whole team that is working alongside the community, educating them on the project as we're working through it, how we understand what's going to be good for everybody. Because we are not successful if they're not happy. So we need the community to provide us with people to work in our mines, people that we can upgrade and upskill. So it's a very collaborative effort between mining companies and the communities. It's just no other way. The asset is in the ground where they live. You need to look after the people around that asset. We're actually encroaching on their space. That's how I see it. And I think if that's the way you work, you'll see your community will work with you, typically.
I think you started answering my next question, which is about corporate governance. So I think you said most of it, but is there anything else you three would like to add in corporate governance and working with Brazil-specific and Brazilian communities that you think that mining companies are doing well and that you have a bigger focus on?
I think that we need to differentiate between publicly listed mining companies and those that are private or privately funded, because publicly listed companies hold themselves up and are held up to a higher standard. And so illegal mining activity in Brazil is a very serious issue. And so you do see a lot of environmental degradation, etc. So we need to be very cautious about not conflating those two things. I think from a corporate governance perspective, and in this world of probably greenwashing or whatever you called, where there's potentially a lot of saying and not a lot of doing, I think it just circles back to the evidence that you have a positive and proactive approach to corporate governance is your ability to successfully advance a project with community support. It's your ability to attract capital at a decent price to allow you to advance. So if you do those things poorly, you will ultimately cease to exist as a business. And so those companies that execute well on corporate governance, I think, is manifest in their ability to advance their business. But I would say that if we talk about the pool of corporate governance, the E, the S, and the G, often there's a very, very big focus on the E, and sometimes the E side of it, the environmental and the social, can be in conflict, because obviously whatever action you take will have an impact on the environment. But if the action that you take is mitigated as much as possible, but has a very, very large impact on the social side, it's about ensuring that you have that appropriately. And so perhaps the discussion, and it's really one thing that we're trying to do, is again ensuring as much as possible, this is a Brazilian asset. It's owned by Brazilians. It is in the hands of a Canadian listed company, and it's our duty to advance that asset in the best way possible, bringing all of our stakeholders alongside of us. And so how do we do that? How do we ensure that that everybody comes away and benefits to some degree. And so just, I think companies in a particular jurisdiction, saying the same thing probably in every question, is just focus on local and then work your way out and ensure that you have the appropriate people building the appropriate relations at all levels. It can take years and it can take decades to build a reputation. As we know, it can take minutes to lose it. And so it's one thing that we're really focused on.
From our side, we're focusing really on making sure we get our disclosures better. So our ESG disclosure, that's really a key focus from our side. And moving ourselves, we showed a commitment as well towards TSM and those global initiatives. And I think that's where, we'll start moving our organization towards, is making sure we can stand at a global stage, which we do. It's just putting them, correctly with the right governance processes to that.
Yeah, so for me, I think the only thing I want to add is just, to start a company as a brand new company, I think it's important to sort of get your house in order internally first, right? So structuring the management team and the board with the appropriate, I guess, skills matrix that covers, all the different aspects that are required or needed in running a successful company for this stage of our operation. So, Nikki talked about how their CEO is a Brazilian national. So we also have two very important board members on our board who are, Brazilian nationals. One who was a SVP at Vale, and one who's a very well-known lawyer, mining lawyer. So, they advise us on sort of, local Brazilian, facets and aspects. And so just sort of structuring that and making sure that everyone sort of, you have that kind of, it's almost like a moral compass, right? So it's like sort of that corporate mission, and then make sure that everyone is on board with that and share the same values. And I think that's just a really good starting point.
That's amazing. And what are the key investment opportunities for existing and potential investors for each one of the companies? This is the time to talk about new projects or anything that you want to highlight.
Well, I mean, you said it, and I think the speaker spoke of it as well. That the world is moving towards a cleaner energy environment, a cleaner world, and amongst those, these critical commodities like copper, like nickel, like lithium, all the ones we spoke about. I mean, they are part of that journey, and so I think we're well positioned actually as an organisation to leverage this growth. So we actually on the growth phase of our business. So. I think there's nothing more to say. I mean, the market is there. It's about making sure you extract into that market specifically.
So for us, we have just, like I said, raised a bunch of money to construct this mine that we're well on our way to, advancing now. And, so with that process, we were able to engage or attract two new cornerstone investors in Franco, Nevada, who put in a $250 million big stream on the project and $75 million of debt, and then also participated in the equity financing and took 10% of our company. And another big investor is La Mancha. It's a family office, originally a family office and now a private equity, well-known private equity investor out of Europe, and they took 25% of our company. And those two due diligence processes took months of work and a lot of back and forth, very comprehensive data room site visits, and they did very comprehensive due diligence on all of the technical aspects of our project, as well as title, legal aspects, and ESG aspects as well. And so we say as the investor, right now you're able to leverage and basically piggyback on the due diligence that these two groups that have all the access to all the experts in the world were able to do and get comfort with. So it's a really good opportunity for other investors to piggyback on that effort and and come along for the success that we think this project will be.
I get to be lucky last. So Bravo, how we categorize ourselves is we have the right people, fit for purpose board and management team that understands how to work in Brazil and has worked very, very successfully in Brazil in the past. We have the right project. It's a relatively unique commodity mix in Brazil. It's PGMs, which is playing into the green thesis. Obviously, they're mostly used in helping reduce emissions today, and also there's exponential potential demand with the build out of the hydrogen fuel economy, plus nickel, and we've just discovered some massive sulfides with nickel and copper, so the right project. We're also in that exciting part of the evolution of a mining company. We're in the exploration stage, producing lots of fantastic drill results, and we have a very strong balance sheet that will allow us to execute on that. And also we're in the right place. I think we've just spent some time highlighting how the positive feelings and attributes that Brazil has and has to offer to the international mining community. And so we look forward to continuing to deliver on the Luanga project in Brazil.
Thank you. I have one more question, then we can go for questions from the audience. But when you're looking at the vendors that you're looking for right now, is there anything particular that you're really in need of, or any projects that you need, like, oof, we really, like, especially working in Brazil, we really need help with this, or finding someone that can provide this services or goods?
For us, our vendor approach is local as much as possible first. We probably have a less complicated business model versus, and our need for suppliers is obviously less than an operating company and a company that's actively building a mine. But to this date, I would say that the access to equipment and service providers and skilled labour, we have found no issues with that at all at this point in time.
I think for us, we're scaling up, and we're building a 1.5 kilometer shaft on the one side, which is a significant project, and we're building, like I said, a 4 million ton project on the other side. And when you look at those, it's really about, you're working local, you want to encourage as much local content, but it's how you upskill your local contractors to be able to come in at the scale you need them to come into for these type of projects. Some of these projects, on Ero Copper side are relatively new in Brazil. Not new, but you don't have loads of shafts in Brazil. A lot of the mines operate on quite small shafts. I think that's probably the deepest shaft, if I'm not mistaken. So to try and find, those type of suppliers you can, continuously supply you correctly is good. But Brazil, strangely enough, has got the most amazing suppliers too. So it's, again, how you work alongside the suppliers, because it's a significant country. It's a huge country it's just getting the supply base to get to your door correctly. And I think it's going to come, again, with a lot of engagement, which we'll need to do. We'll have to actually get better at. As we're working it, we're actually learning all the time.
Yeah, so same for us, we're prioritizing local content. So a lot of our procurement has been from within Brazil, and we're lucky that, there is a very mature industry in Brazil that supplies a lot of what we need, which is something that the team didn't have before. So our team has constructed mines in Suriname and Ecuador and, a lot of other countries, Guyana, that didn't have the same kind of endowment as Brazil does. So we're feeling pretty spoiled and don't really have a lot of complaints. But the one thing that sort of did surprise us is just for a country that has a lot of iron and steel and a lot of other sort of and equipment that's obviously made out of that material, we actually weren't able to source any big haul trucks, and that's sort of like the only thing, when the Russia-Ukraine war broke out, and that whole supply chain issue was really kind of at its worst, was something that I think our CEO lost a couple nights sleep on, but, it resolved itself. But had it, been coming from within Brazil, then it would have been so much easier. So I guess it's just that one aspect we've had some challenge with.
That's amazing. Thank you. Do we have any questions from the audience? Go ahead.
Yeah, I'll just throw an appeal. I'm a geologist myself, so two of you can share sentiments with me, and it'll extend to an electrical engineer as well. Just some clarity on deposits in general in the world. They're becoming harder to find. They're more covered. They're more remote. And I know everybody up there can agree with that. So accentuates all the challenges you've already outlined. Getting local help, getting technical help to these more challenging locations. Same with hydro, same with energy, just facilitating mines that you can extract from the ground. This is just a reality of our world. And that confronts a larger reality, and I always put this for the mining industry. Nothing, absolutely nothing is possible in modern lives without mining. What's that?
I think you might be speaking to the converted here. You need to be out there speaking to a green Stop Oil advocacy organisation. Look, I think I might be the only geo up here. Engineers. You're lucky that we're all sitting here together and playing so nicely. You're exactly right. Deposits, the easy sticking out of the ground stuff has been found. That stuff, easy sticking out of the ground stuff that hasn't been mined, it's normally due to some exogenous risk that's country specific. Permitting is getting harder, timelines to build are getting harder. We were just having a conversation earlier today that now the average timelines from discovery to production is 20 years. And a big part of that leadway, it's really down to permitting. And the permitting challenges are becoming more and more problematic because, again, people don't understand where their stuff comes from. On the flip side of that, it's great for commodity prices. I mean, I'm a big commodity bull. Copper is, I mean, how can you not love copper? Gave a talk last year and an interview, and I said, well, I've drunk the Kool-Aid on copper. I think copper's going to $8. I mean, this is the fundamental, you're going to talk about commodities and their integral mix to us as a civilization, as a society. Copper is very, very key. And you can't just decide that you're going to build a copper mine. The big ones require billions of dollars of effort. You're seeing the biggest copper producer in the world is Chile. They're very, very focused on water right now. Your ability, so much so that they're focused that they're actually suspending mining operations. So I think what you'll see around the globe, and it's probably going to take us to get there about mining, is people are going to wake up one day and prices have escalated enormously. Nothing new is coming online, and people will start to viscerally understand how important mining is. I don't see things changing in the near term. I know I spend way too much time around mining people because when I meet someone who isn't in mining and you have that normal what do you do question, the response to me when I say I am in mining is never positive. It's never, oh, great, your industries are doing a great job with helping. It's, oh, how could you, and how can you live with yourself? And so there's a very, very big disconnect between what we as a globalized society need and what we're willing to do to get that. And how that plays out, I think we're going to see wars fought out over resources. But I'm a little bit nihilistic. Sorry to end on a negative note.
I mean, it keeps me awake at night. It's about how I think you'll probably find the assets. I mean, if I look at what we see significant opportunity. But we obviously explore in Brazil a lot. So I think it's around how you extract the assets. I think the biggest issue is really around how you can leverage what you have. I think that's where Copper is a bit different because it's not different, but it's got a unique advantage where it's got a very strong, historic 45-year execution delivery team. So it's how you leverage that. I mean, it's really what we think about all the time is how do we take away from these nice geologists and mess up their ore body and make them work and make them operational and take it out of the ground in the best way. It's about the people. It's about the execution. If you can't get that right, I don't know how you're getting it. It's all then just a story, right? So our job is really to take it and move it along. That's the biggest issue is that part.
Yeah, so I absolutely agree that discovery has been going down, and and it doesn't help that investment in exploration hasn't been keeping up as well. However, there are still a lot of projects that have been discovered, or assets that have been discovered that are sitting on the shelf and have been sitting there for a long time, right? So because incentive price hasn't been reached, or capital intensity has gone up because of inflation. So I absolutely agree that I'm also a commodity bull. I think eventually when we run out of the easy to extract stuff, we're going to be going to those let's call them less loved assets or the forgotten assets. We'll be dusting them off and redoing those studies, and they are going to cost more money to mine, and so prices are going to go up, and cost of life will be going up, and so it's not going to help with inflation, and which is, I guess, I'm going to put in my 2 cents on gold price. We didn't talk about gold price today, but I think it kind of bodes well.
That's go ahead.
I just was going to, just one point, and this is actually a structural issue, is exploration is the R&D of our business. Without exploration dollars being spent, we don't have new discoveries. It's incredibly high risk. It's 1 in 1,000 discoveries turn into a mine is a statistic, so the odds are stacked against you. But what we have seen is a shift from majors doing terrain scale, multi-year, if not multi-decade commitment to exploration, to outsourcing that to the juniors. And I don't think that is sustainable, because juniors have to finance, and they have to finance because of excitement in owning their shares. That excitement doesn't come from saying, I'm going to commit to soil surveys and geophysical surveys and doing all the steps that you need to do proper, detailed exploration that increases your chances of discovery. They finance off the drill bit. And so that's why you see recycling of basically crap projects. They go back to XY crap project, they didn't make it last cycle, twin a couple of holes, raise some money. So there's a fundamental disconnect, I think, in terms of maybe a lack of understanding at some of the larger companies on how the junior industry actually has to work. And innovative exploration doesn't necessarily get rewarded.
And to add to that, Nikki, that's a really good point. Here's another factoid about the industry. 90% of initial discoveries, you know, who they're made by? The small guys.
Yeah.
Always.
Yeah.
You have to have that market fundamentally thrive, or you don't make this.
Yeah, what juniors bring to the table is a hunger and an ability to react quickly. But then again, on the counter, you need a long-term commitment.
Yeah.
So it's yeah.
That's amazing. Thank you so much for being here, and thank you so much for sharing your knowledge and all your thoughts with us. I really appreciate that. Thank you.
Thank you.
Photo op.
Oh.
No, stand.
Oh, okay.
So Ingrid, Fernanda, we're going to do a couple of photos. Don't everybody leave?
Should we do the closing remarks and then we do the photos? Can we just do the closing remarks real quick?
Go
Sorry.
back and sit. Yeah.
Sorry, it's just so we can do the photos and then move to the networking. I just want to thank everyone for being here. I want to thank our speakers for being here and giving us the opportunity to hear everything, all the amazing things that you had to teach us today. Second, I want to thank our sponsors. So Valley, which is our platinum sponsor, EDC, Wetton, Precious Metals, there we go, G Mining, which are gold sponsors, BMA Law, Jaguar Mining, Lundin Mining, and Alvarez and Marshall, 4B Mining, and Brookfield, which are silver sponsors. And I want to thank the consulate for being here and the representatives of the Brazilian government for being here. And thank the volunteers and everyone that helped put this event together. In our 50th year, we are invigorated that we're celebrating new Atlantic chapter with Port St. John's. So we have a new BCCC chapter in Port St. John's, the new chapter from BCCC as well, the BC as well, and an Ottawa chapter. And we are starting with a Manitoba chapter as well. So we have plenty of events. And Alberta, yes. So we have, it's a lot to keep count on. So we have many events coming in. We also have an event happening at PDAC, so make sure to tune in for that. And those are my closing remarks. Would you like to say?
Just a comment.
Oh, yes, go for it, please.
As a Brazilian diplomat, it's very proud and optimistic that when three non-Brazilians speak so highly and very positively about the business environment in Brazil. I think that judged solely on the basis of its geopolitical attributes and the vastness and richness of its natural resources, Brazil should long ago have been considered one of the most significant countries in the world. It's the 5th largest nation and the 6th largest in terms of population. So we are very optimistic that this new government in Brazil will usher an era of the much needed reforms we need, including the fiscal reform. Just to give you an example, we have 5 taxes on services and goods. Then we have 3 levels legislating about taxes: the federal level, the state level, and municipality level, which makes it a very complex system. And I've heard a lot of complaints from businessmen about the tax system in Brazil. And the other thing we need to work is our image, so that this image matches with the reality. And I was talking to Nikki that I served in the Brazilian embassy in Australia. And once, in that year, in 2010, 2009, we were building a hydroelectric plant in the northeast of Brazil, which caused an uproar of the international community several environmental studies were conducted and concluded that the impact to the environment would be minimal in relation to the benefits that hydroelectric plant is going to bring to the region. So we had a manifestation in front of our embassy in Canberra, and my boss, the ambassador, had worked with former President Dilma Rousseff in the Ministry of Mines and Energy. So he was very knowledgeable about the energy matrix in Brazil. So he called the leadership of the movement to explain to him, that Brazil had more than 90% of clean energy, and they didn't know anything about it. They just told us, well, we don't even know where Brazil is. We were just called by our headquarters in New York, and they sent us to the front of the embassy to do this demonstration. So that's what we have to work. And people like you are very good examples of how this image is not accurate. The image many people outside of Brazil have. So as the head of the trade promotion sector in the consulate here, your testimony made my job very easy. So I intend to invite you to give the same testimony in every event that I Canadian entrepreneurs.
Thank you so much. Thank you so much, everyone. We will take pictures now, and then we can go for the networking, the end of networking.